Welcome back to my channel. My name is Jeff Krumbaker, real estate broker, Oregon and Washington. Today is week 3 in a 4-week series focused on being a first-time home buyer in this crazy market that we're dealing with. Today we're going to be talking about lending and some techniques that I just want to touch on. So if you're new to the channel, please like and subscribe. Leave a comment in the description if you have something you want to say. If you want to talk real estate, give me a call, look me up. The link to my website is in the description, so check it out. Okay, so let's go ahead and dive in. I got a couple questions here. As a home buyer in the market, you guys might be asking yourself, how has the interest rate increase changed my home buying power? That is such a great question. Well, for starters, if we're talking about lending, that means that you don't have the cash to buy 100% cash. That means you got to get lending. So talking to a mortgage loan officer is vital in this situation. Mortgage loan officers, they have a lot of red tape that they need to go through, just like a real estate professional, like a real estate broker. They would be able to take a very personalized approach in answering this question. The way that I'm going to answer it though is when interest rates go up, it has an effect on your monthly payment. PITI, premium, interest, taxes, and insurance. That is what creates your mortgage bill, okay? So when you have a higher interest rate, the price per month, not the price per month, your mortgage payment will go up because the interest payment is spread out over a 12-month period based off of the fully amortization time period of about 30 years if you're getting a fixed rate mortgage. There's a lot to think about when it comes to a mortgage, but essentially with higher interest rates, it causes your monthly payment to go up. Now, if you have a higher monthly payment, that is going to cause your buying power to decrease. See, you have to meet debt to income ratios and housing ratios according to your debt. In order to do that, you need to establish some criteria involving your lending capabilities. So let me go a different direction with this real quick. So ultimately here's what I have written down because it's going to make a whole lot more sense. The interest rate secured for your mortgage significantly impacts your monthly payment, potentially elevating it and reducing the size of loan that you qualify for. As a solution, consider options like buying down the interest rate, opting for a fixed interest rate loan, but ensure to thoroughly evaluate all possibilities when defining your optimal approach to home buying process. There are other things to consider also. We live in a day and age where some mortgages are assumable. That's a whole different conversation. You might not even need that, but the idea would be is that a seller has a mortgage, maybe their interest rate is lower, maybe their mortgage is assumable. You would just need a second mortgage to cover the difference between how much of that mortgage is covering the purchase of that property. I probably didn't make any sense with that. So if you want to know more, reach out to me, we can talk about that. But there are options involving dealing with an interest rate that has been increased. You will talk with a lender and the lender will say, you're pre-approved to this value. Okay, so you're pre-approved at $350,000. If the interest rate goes up, that $350,000 goes down. So your buying power, depending on the interest rate, how high it goes up, it could mean that now you don't qualify for $350,000, you qualify for $300,000. Well, in your market, like in my market, $300,000 doesn't buy you a whole lot of house right now. So you could go for a condo or something like that. But anyways, let's move on because I talked too much about that one. Let's look at my next question that I have prepared. This one I titled Down Payment Wisdom. So in regard to financial planning and lending, you might be asking, how much money do I need for a down payment on a home? That's a great question. You know, the required down payment for a home varies based on factors that are going to be unique to your situation. We got loan type, personal financial situation, as well as your economic conditions that your market is in, because you have macro and you have micro. But we don't need to get into economics. So a consultation with a mortgage lender is essential to determine the optimal down payment amount for your circumstances. Looking at an FHA loan, looking at a VA loan, looking at a conventional loan. You have a lot of options, but you don't know which ones you have until you speak with a mortgage loan officer. So that's something for you to think about. And I would encourage you, rather than speculating on your eligibility, successful clients of mine have begun the process with an initial consultation to explore their options. So I would encourage you to reach out to your preferred real estate professional or mortgage loan officer and start some conversation. Let me see if I have another question. So this one is titled Mortgage Journey, right? So you have your transaction, but inside of the mortgage itself is an incredibly diverse journey that you and your mortgage loan officer would have to go on. So when navigating your financial options, you might wonder, where can I get pre-approved for a home loan? That's a great question. If you go onto Google and you type that in, you're gonna get a ton of mortgage lending companies popping up. And they do that because they want to earn your business. I mean, that makes sense. That's how the internet works. But opting for the ideal mortgage requires a thorough comparison of rates and terms and fees, and you really should be shopping this across different lenders. This would ensure an alignment with your specific needs and goals. So I want to encourage you that you're not by yourself. There are hundreds of thousands of other individuals that are searching the internet right now for this exact topic. And so I would say, rather than guessing where to start, you might want to consider seeking quality results by asking for advice from professionals. Remember, in the previous video, we talked about your real estate team. You need a real estate agent and you need a mortgage loan officer. Between those two people, they're gonna help you through the entire transaction. They're gonna be able to give you professional advice inside of their sphere of capabilities with their licenses. A loan officer is a mortgage loan originator, and a real estate broker or agent has a real estate broker's license in that state, depending on where you're at. But essentially, I hope that helps provide some insight. You know, if it were up to me, I would have you reach out to me, whether it's phone call, email, or you get onto my website in the description below, and we can have a conversation about what it looks like to buy in this market, what lending looks like. Depending on your market, I can have you coordinate with a loan officer in that market, and we can get you on the journey to home ownership. Okay, my goal is to help you from start to keys. So thanks for tuning in. This is week number 3, okay, of our 4-part series focused on being a first-time home buyer. So hang tight, and I am working on getting better behind the camera. So give me some leeway on that. But anyways, like and subscribe. We'll see you in the next one.